Hey everybody, Matthew Cole with West Shore Mortgage here in Sacramento. Today we're going to talk about different loan types and how you know if you're getting the right loan. In mortgage, our job as a loan officer is always to dissect a person's loan application and try to give them a fit of what loan opportunities or what loan options are going to be best for them. There's three different types of loans that we primarily work with, which are going to be conventional, FHA, and VA. There's a few others that we'll get into, but they're not used as much, so we're going to keep those to the side. But conventional is going to be the best loan type that you can get into. It's kind of like the Mercedes-Benz of loan type. So you're going to have, your best credit scores. You're going to have your best types of payment opportunity when it comes to mortgage insurance. You're going to have a really good loan payment. Those go down to 3% down, obviously as much as you'd like. There is down payment assistance programs that attach to those also, so a little bit structured differently, but you can do a conventional loan with down payment assistance. If you do put less than 20% down on a conventional loan, the best part about the PMI that comes with a conventional loan is that after you have 20 to 22% of equity, it automatically will come off once you petition with your servicer to have it removed. And that way, if you have an extremely low interest rate and rates have increased, you don't have to refinance to drop the PMI. There are also first-time homebuyer loans through conventional, which are through Fannie Mae Home Ready and Freddie Mac Home Possible. Both of these are going to have income limit restrictions, but they're going to offer you discounted rates and discounted mortgage insurance. So definitely keep your payment a lot lower than you would get on a regular 3% down loan. An FHA loan is going to be structured more towards your lower credit, higher debt to income ratio type client. They're going to be your next kind of option if you can't qualify for a conventional loan. We do quite a few FHA loans. They're government loans, so there's a couple different things that are ran differently in regards to background checks, in regards to student loan debts and things like that. So if you have any student loan debts and you're doing FHA, you really want to pay close attention to those. On an FHA loan, it does allow for the higher debt ratios like I was saying, which allow you to go borrow up to, most of the time, up to 56.9% of your gross income and your housing plus liabilities on your credit report. FHA also has mortgage insurance, but the thing about the FHA mortgage insurance is that no matter what, it never goes away. You actually have to sell or refinance your loan into a conventional loan for the mortgage insurance to fall off. So that's one of the only negative downfalls to using FHA when you buy. FHA also has a upfront mortgage insurance fee, gets financed in the loan, and that's a little bit less than 2%. It's not a hard cost out of your pocket, and it gets financed into your loan, so it makes it a little bit more helpful there. But FHA is going to be a really awesome option. It does have 3.5% down, which is 0.5% more than the conventional, and also does come with the down payment assistance as well. Good option if you can't qualify for conventional. FHA is always kind of the best option that you can go to next. The last main loan that we do, quite a few of, actually more than FHA, is going to be a VA loan. The only thing there is that you have to be a veteran. So if you're a veteran and you've supported the country, thank you for your service. This loan is the best loan you could possibly get. It's better than conventional, it's better than FHA. This loan is going to have no mortgage insurance, it's going to have discounted rates, it's going to have 100% financing. The only thing you really come out of pocket there is your closing costs on those loans, but VAs, if you can qualify and you're a vet, best loan you can get. If you're a veteran and you have any kind of military-related disabilities, typically you're going to be exempt from what they call the VA funding fee. This fee gets financed into the VA loan. It's not an out-of-pocket fee, but if it's your first time use, it's a little over 2% of the loan amount, but it gets financed into the loan. It's required on all VA loans. There is USDA loans that are out there that are going to make you have to buy in a rural area. Thing is with that, you got to live in the boonies, which it's a great loan, discounted rates, low mortgage insurance, 100% financing, also income's restricted and extremely debt to income ratio restrictive. So with those, make sure you're doing those rights because those are trouble loans. If you have any questions about which loan type would be best for you, or if you have somebody that's putting you in a loan that you're not really comfortable with, which happens a lot, reach out to me, run the scenario by me. Would love to try to get you into the right loan the first time so that you don't get stuck refinancing again and again and again. So if you have any questions, reach out, hit me up, like, share, all the above. Thanks.